WTI crude update for the middle of the week, beginning of September. It's the 3rd today. Yesterday was a bit of a surprise. Not really a surprise that we failed here at this Fibonacci resistance and below the 100-day moving average. We did expect that, but this massive sell-off, to be fair, caught me out. We took out 7 days or something worth of price action, so we're now back testing August lows or close to it. We got as far as 90. Where is this now? It's not showing, but anyway, we got very close to the 92.50 area yesterday. We're just hovering above here now. You can see these little lows down here. We're going to have to get through those. All these levels are on your sheet today for any bounce, but it's looking unlikely we're going to bounce too far now. This is quite significant, this big red candle here, of course, and the risk is now of a break. We've got very important longer term fib support around the 92.60-50 area. So it is key and it is holding so far, but a break lower certainly wouldn't be a huge surprise. It doesn't look good at all, this chart, and then we're going to be hitting longer term trend line support, details of which are in your report, so I won't need to repeat that now, but you can refer to today's written report. It doesn't look good. Yeah, I think any bounces is now a selling opportunity after yesterday's big sell-off. It looks like that has set the tone for September, really. We had some big moves in the dollar, which looks like that's triggered moves in gold and oil. So not a wise idea to fight that, and I think we better be ready for that break lower. 92.68 was in fact yesterday's low, so yeah, we're closing in on August lows and that important fib support. Watch for the break lower. Brent crude, of course, also took a big tumble. We'd managed this little flag in a bear market, which we weren't confident was going to be the start of a bull run, and we were looking for it to move lower. But yesterday's big sell-off again took us by surprise a little bit. Couldn't have predicted that, but still. This 2.5 month bear trend very clearly still dominating, so unwise to be picking bottoms in oil. I think strong dollar, I imagine, having an influence on that. We've broken some very important support levels in Brent, so it looks like we're just going to continue lower. We've got some targets on the downside on today's report. If we bounce, well, we've got obvious resistances and some sell opportunities. I don't think we will see much of a bounce, and I do think any rally is a selling opportunity, but refer to your report this morning for those levels. Energy markets in general have been under pressure in the last 2 or 3 months. Gas oil certainly broke below some important support yesterday, and nat gas, as we're looking here on the daily chart, also came under significant pressure, taking out 2 or 3 days of price gains. Again, this doesn't look good. Strong dollars dominating. I think what's happened at the beginning of September is going to set the tone for September. I think I've said that already. Nat gas has been in a bear trend now for quite a while. We managed a little recovery through the end of August, which we'd had expected after this double bottom, but that now looks like it's over, and if anything, a retest of July-August lows looks more than likely at this stage. We'd really have to get a close above 4,000 again for me to start thinking more positively about this, but the charts generally look pretty negative for the energy contracts, and nat gas is no exception.